5 seconds. Let me just check the microphone. 5 seconds left. Market is open. For context, we are in a trading range. We have opened above the moving average. Let's see if we can sustain this price. This is the 15 minutes chart. I'm taking 20 period moving average as a reference point. We have a very tiny gap. Overall, this is a trading range. On a weekly time frame, on the electronic trading hours, we already have gapped up. This is the weekly candle. Keeping in mind today is the last and second last day till this month is going to close. See, 1 day and 8 hours left till this candle is going to close on the monthly time frame. So I'm expecting some sort of a choppy price action or low probability price action today and tomorrow, because we have FOMC and the monthly candle is going to close. So, okay, coming back to the 5 minutes time frame, let's see if we can sustain above the previous week's high. This is the monthly time frame. Coming to this is the weekly time frame. Now coming a step lower. See this point, we have a major imbalance on the daily time frame at 308. The daily candle is completely wickless. We closed here at 6 o'clock and we never moved down even a tick below this low. So this is a very, very high probability that we are going to test this point, the open of the day or the price, yeah, this price, right? We might just go directly towards this point, 309. 309 on a five. Okay, coming to, let's see the 4 hours, then conclude our general analysis. So this is a very, very high probability target, 3010, 309. Overall, we are in a trading range. This whole week was a trading range. Probably we will get some sort of a, if the FOMC today is eventful, we might get some sort of a big move out of this. But I'm not expecting anything within the first 2 hours of this price action. So So I was hoping that we might not touch this point until the first 15 minutes, but that target is gone already. So the first 15 minutes is where I'm not allowed to trade. That creates the initial range. We came very close to that low. So that target is still intact. This is this specific candle I'm talking about at 5 p.m. 308. This candle opened, never went down even a tick, and we are coming to touch this point. Very high chance, very, very high chance. It would have been much better if we close this 15 minutes above this range, then I can target this range and just call it a day. Okay, this was the criteria or the context for the electronic trading hours. On the regular trading hours, just take a look at this point. If I open up the daily time frame, see where we are bouncing off of, we are bouncing right at where we closed yesterday or the gap closed. This was the gap. We are bouncing off of that gap. Still, just things to keep in mind. We closed. You see, this candle closed below this line, which is PWH, previous week's high. We closed below the previous week's high. So that tells me that we might touch or close the gap if the FOMC is eventful. So I'm going to mark this high, which is the breakout point on the weekly time frame. This is the breakout point. Weekly breakout point. The text color will be this. and weekly breakout point. Okay. So this is a really good thing. The low of this candle is 312. We never retested this point, 309. So this target is still relevant. That's a very nice thing. I can target this low. Depending on how the market closed, the first bar is closed. The first bar closed above the moving average. All I'm watching now is if the price can sustain above the moving average for the next 8 minutes, and this 15 minutes will close. Depending on how the 15 minutes will close, I will take a trade direction from the breakout point of the 15 minutes, aiming for basically half of the range. This is something to keep in mind. We are retesting the 20 period moving average on the hourly time frame, which is a key level which aligns with the previous day's close. First 15 minutes is an outside bar. First candle on the RTX is a doji. The second candle is a bad follow through. It's a down close candle with an up close candle. Both are not strong candles. It's a down close candle, but bulls were in control. This was an up close candle, but bears were in control because it closed below the 50% of its range. Let's see how this will close. One other thing that the price is doing that I should be careful about, that we this you see this dotted line is the 50% of the n wall. So we are refusing to go below that point or close below that point. This is something to keep in mind. The total range of the first 15 minutes is 58 points. This is a typical trading ranging behavior. First 15 minutes is about to close in 2 minutes and 30 seconds. We closed below, we immediately closed above, but still this is the candle where we are operating within. This candle on 8:15, 8 o'clock candle, 15 minutes candle, the first 15 minutes on 8 o'clock. Never got a closing below this candle. We tried to go above, but failed to close above. The first candle will turn out to be a doji exactly. I don't think we are gonna move that fast. So I'm just gonna mark or front run to draw the first 15 minutes range. I'm going to drag it till 11 o'clock. This last minute. Are we going to extend this range now or what? It's a very choppy price action on the 1 minute. It's making some sort of a bull flag, but I don't really trust this bull flag. Still, I'm going to execute. I am going to execute. That's something. I need at least one single close. This was the bull flag I'm talking about. The 15 minutes are close. I need at least one single close above this range, the yellow box. I want to see if this can contain price, sustain this. Long, 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 long. 26 seconds left. Risking 31 points. What will be my target? Target's about. This is a strong close. Strong close. We are. This can potentially come all the way back down to the previous day low or and target this point. So I have to keep this in mind. If a 1 minute can be closed within this range, I'll just close the trade. I am very, very careful trading here because it can come all the way back down. So I'm just taking a chance that it might go 30 points off before coming back down. So if this 1 minute closes, I'm in the trade right now. I'm like I did always pending order is at the top of the range. First, I needed confirmation. I got my confirmation. If it closes below this low, 9:45 candle, 1 minute low, I'll close the trade because it can potentially come back all the way back down. See, see. And we got a very sharp close. So I have lost around 8 points. First leg, this might be the second leg trap on the first leg, second leg. We can come back down. Like this is strong close, strong enough for a second leg down. If I take a short, I'm not taking a short here because I'm not allowed to. This is not my setup, but still, if I were to take a short, if players who are shorting this, putting their stop loss right above this point, they will get their 1 to 100 reward ratio right here on this. 950. We have not taken out the low of the first candle, which is a very, very high prob. It is 80% chance that we will take this low. I'm not in the trade right now. I have lost 8 points in total. I got in at limit order. This was a limit order long. Then price suddenly spiked down. I got out here. Can this be second, third leg, or can this be the first leg or the second leg trap on in the trading range? Okay, bulls. This is where we open, right? We're right at where the market opened. A lot of tails below the bars, but still the bears who sold the close of this bar, they will get out at one times their risk. And the bulls or the bears who sold this close and sold more higher, they will get out at break even. A lot of tails below the bar. We are retesting the moving average again. Seven minutes till this hour is going to close. Closed above this, immediately move back down. We might close below this point now. Uh, Back to 1 minute. We closed below this VIX, but it does not really mean anything because we never got a validation when we were going up, all it meant was this is a probable trading range and we are making an expanding triangle. Okay, for an expanding triangle, we are right around the 50% of this. Within the next 5 minutes, the hourly candle is going to close. That might provide us the volatility I need for this trade to work out. Okay, I bears who sold this close, the consecutive two consecutive bear bars, they will get out at break even. 219. We are getting rejected again and again and again from this previous day standard deviation. The price is getting rejected again and again. So let's see if this can hold price. If we close below this blue line or the previous week's high, then something can be said about bears. 3 minutes, probably will get some sort of volatility. 309 is a very, very good target and a high probability target. Two minutes left. Let's see how this hour is closing. This hour is a doji candle, no doubt about that. This is the range. 11 o'clock, 29th July. This is the price or the candle, which is essentially the borders of this range. If I point exactly what I'm trying to say, this is what I'm saying. If I draw this like here, I know it's becoming really messy, but right at 50% of this candle, which is the range itself, 15 minutes back, 15 minutes. This is logical target. 319 is a logical target, and this is 309 is a probability target. Yeah. New hour. This is the new hour candle. We closed. Hey, check this thing. We closed below the open of today on the hourly. Things to keep in mind. Here, the 30 minutes would have closed. Yeah. So coming back to 5 minutes, and here coming back to 1 minute. This is something I'm keeping an eye on. 320. 320. This blue line is rejecting price again and again and again. This has been going on for like the whole day with the confluence of the 5 period moving average. A bear bar, bull bar, bull bar, bear bar, bull bar, bear bar. Alternating bars, everything is indicating a range. So anything you say or I say, but 309 is very, 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 it's a good target. We're retesting this blue line again. Let's see if we get rejected or not. 2 minutes. This is the okay. This is something interesting. We have 2 minutes left. If we close below the moving average, we can easily come back down to the low of the day, which is on the regular trading hours. And we can also test the 309, which is the low of the day, new low of the, which will be the new of the low of the day because this candle is inefficient on the daily time frame. असली चेहरे का मतलब ये नहीं ਹੁੰਦਾ This is FOMC price action. 14 seconds. Let's see if we can get a close below the moving average. Every bar has a tail above and a tail below, a tail above and a tail below. This price action is not quite ideal. Bulls bought this close, definitely bought this close. They saw that bears are failing to go below the moving average. Bears are failing to go below this previous week's high. We might get some sort of a pullback and then continuation of this leg. This would be the first leg, second leg, first leg, second leg. We came to very close to 1.5. If it moves above this price, I'm going to buy again. Uh, this is strong enough. -16 minutes, 16 seconds. If we close above this bar, no, that's nice. This is more of a sell the close bar. If I take a single standard deviation, takes us right to the low of the n bar. Still, this is the target. We feel too close above this low, so this is the target. A single standard deviation of this candle's range takes us to the low of today. Let's see if the price can go below this blue line. If it fails to go below this blue line on this try, I will just bail on the day. I'll just walk away. I don't think this is worth taking any more chances on. Nice. I'm targeting 309. This is the idea. 309 is the target. This candle should definitely close below the 5 period moving average. Like this blue line oh, oh god, sometimes the tools I use myself are poison to myself, right? It becomes like some sort of a they turn against me. Or this blue line is something that I draw, and now it's against me now. Fuck this shit. I don't like this. I don't think these are the conditions I should be trading in. Anyways, I can still get a move. I don't want to. We still have the low of the day, which is a potential target 3909. Where we are in reference of the daily time frame, we can expect a strong move towards the upside. So it basically 50-50. And we have an FOMC. So I would rather just bail on this day, or either I'll just get like shredded into pieces if I keep trying again. I'm managing my risk. Okay, I'm not showing all of these trades here because the trades I show here are a part of a setup. That setup is the 15 minutes range, right? So outside of those setup, I'm not showing this trade, but I'll tell you what I was trying to do. When I saw this move, I was expecting a second, at least. I've sold this close. I was expecting this move. I was in profit, then this should happen. Okay. Then I sold this close, again targeting 309. But you see this candle on a 1 minute. What what is this? So no, no. This candle would have been much better if it closed below the 20 period moving average, which it didn't. So at this point it's 50-50, and I'm not really comfortable trading with this probability criteria. All right. And for this reason, I'm out.